Hello, everyone. Welcome back to Financial News in Palos Heights, and I'm Ron Jankowski with Channel 4. And of course, we have Paul Munichel from Ameriprise Financial to give us an update as to what is going on in the marketplace and many other things. Paul, I'll let you take it.
Thanks, Ron. I'm going to begin today's show by reminding people, if they haven't forgotten, about what happened 11 years ago, that being the 2008 financial crisis. And questions I often get about the financial crisis and the Great Recession that followed is, are we going to head towards one again? So here's some comments on that today. We do know that left an imprint and fear in the minds of many that lived through the investments of 2008 and into 2009. We all know how the Great Depression permanently affected parents' and grandparents' generation, but so too has the Great Recession. It affected most of us, just maybe not to the same degree as the recession. Or depression, sorry. As such, recent liquidity problems in overnight lending markets, most notably the repo market, has stoked fear on the part of many ordinary investors. They remember that there were very similar financial problems just as the financial crisis was getting into full swing back in 2008. Now they wonder if it's all starting to happen again. In our opinion, it is not, at least in our view. In our latest Economic Views briefing report, we discuss and explain the recent problems, and we try to put them into context. We've structured the report as a Q&A, mimicking the questions we've been receiving from you and the inquiries you have been receiving from clients and prospects. Our key point in the report is that, in our view, the U.S. financial system is currently in strong condition, and we see relatively little risk from adverse banking system developments over the intermediate term. One of the facts that drove the problem was that a sharp increase in the new Treasury security insurance had soaked up a considerable amount of system liquidity. When financial institutions purchase new debt from the Treasury Department, they pay for those purchases with cash. This was a sudden problem recently for two reasons. One, the very large deficits the U.S. government is currently running, and two, the fact that new incremental Treasury debt insurance was quote-unquote on hold for much of the year because the government had reached its statutory debt limit. The good news here is we don't think this is leading into a 2008 type recession. I do have, I commented on the report that's out there. I just gave some of the highlights, but any of the viewers at home that would like that full report, feel free to reach out to me and I'm happy to get it to them. Again, my number directly is 708-226-3412.
Okay, very good, Paul. Thank you for that. And Ameriprise Financial also gave us this morning research notes, excuse me, that need-to-know information. Domestic stock index futures are higher this morning as optimism grows for a U.S.-China trade deal following supportive comments from economic advisor Larry Kudlow. Larry Kudlow, I want to mention, was a financial media commentator and is now an advisor for President Trump. So
yep, you're right.
I just wanted to share that with you. The yield on the 10-year Treasury is holding near 1.84%, and while the 2-year is higher than 1.62%. Any comments on that, Paul?
No, we're seeing movements on both sides of the market, stock and bond market, reacting probably as it should at this part of the cycle.
And stocks in Asia closed mostly higher as investors weighed mixed signals on the global trade. NVIDIA reported better than anticipated quarter results, but the chip maker's forecast fell short of expectations. And that is the information for this weekend. Is there anything else you want to add to this?
No, I don't know if you've got the data on the year-to-date stock returns.
Yes, I do have, and I'll share this with you. The S&P 500 is 25 plus a 25% year-to-date. The Dow Jones is a plus 21% year-to-date, and the NASDAQ Composite is 29% year-to-date. Boy, what does that tell you?
Staggering numbers. And it's big highs like that lead people to think we must be heading into some kind of big pullback or recession. And I've said it before and I said it again, bull markets, rises in the market, they don't die from old age. So I don't know when it's coming. Of course, there will be a pullback coming at some point, but so far so good. The market looks strong, the economy looks strong.
Sure does. I just hope we can keep this and maintain this level and not move up too fast, but keep moving up forward. We're doing very, very well. Stay with us. We'll be right back with your money. And Paul is going to be talking about a holiday gift guide, and let's listen to what he has to say. Stay with us. We'll be right back. Thank you for staying with us. We're back with a show called Your Money, and we're going to be talking about holiday gift giving and making the gifts with a lasting impact. And Paul's got some comments to make on this. Paul, I'll let you take it from there. And I might have some questions as well as you're going through.
Perfect. The gift giving season is fast approaching. So if you're like a lot of people, this means you are spending time trying to brainstorm gifts for your loved ones, something that they will use and will appreciate. For those disillusioned, though, with giving gifts that are quickly used up or forgotten once the wrapping paper comes off, today's show we're going to talk about considering a few financial gifts designed to make an impact. I've provided Ron with a list to keep me on task of some financial gift ideas that you might feel good about giving.
Okay, the first one is start an account, savings account, that is.
Yep, so maybe help instill the importance of saving with the gift of a partially funded savings account. A variation of this gift idea would be to open maybe a Roth IRA if your loved one is working full-time but hasn't yet established a retirement account. Roth IRA investments earnings, they grow tax-free, which make them a good investment option.
Paul, what about purchasing a savings bond?
Yep, that would be point number 2. Savings bond is something to consider. You can give someone you care about a secure way to save. Savings bonds are low-risk investments backed by the U.S. government. There are no fees or expenses, and bonds do not trigger state or local taxes.
And then you also can donate to a charity in the recipient's honor as well, couldn't you not?
Yep, you can. That's always a nice consideration. Being that a charitable donation, it is a thoughtful way to acknowledge a cause your loved one cares about. As you research charities to support, look for ratings that indicate how efficiently these organizations use their donations.
And buying stocks, responsible stocks, though.
Yep, that's a good point and a consideration there. It's another way to support something that is bigger than both of you. Choose your criteria and look for companies that exemplify the values that matter most to you and your loved ones. Stock has the potential to increase in value over time, so your gift also represents savings that double as some financial security.
And of course, funding an educational savings plan would be a very wise decision as well.
Absolutely. Your generous gift there can help a grandchild start saving for future college costs. There are several types of savings accounts designed to help parents and students save for future education expenses. And in this category, every little bit helps.
Exactly. And then you may want to chip away at a debt as well.
Exactly. Many young adults are burdened by student loan debt. Juggling work and loan repayments can be challenging for anyone. Your loved one will be pleasantly surprised when you relieve them of maybe a loan payment.
And, helping with a down payment on property, it would really help.
Absolutely.
Help get started.
Whether you're purchasing a car or first-time home, as you said, Ron, you may be able to reach out to young adults if you have loved ones who could use a little help in this category. Your financial gift can assist them as they get settled in on their way to their greater financial stability.
And a gift of cash, I'm sure, is always welcome.
That one's always appreciated. Anyone appreciates a cash infusion. So if you're so inclined, you can suggest how the money is spent, especially when recipients are not inclined to treat themselves.
and gift an appointment with a financial advisor.
That's a good one. I think you put that one in. Always a good idea, though. We always stress the importance of meeting with a financial advisor. Most advisors will meet with you for free, but I do like that idea. I'm glad you snuck that one in there.
Yep. I guess what one should do maybe is to consider all these things that you mentioned, and maybe there might be something that we did not cover. And again, give your phone number because there might be a request for more information on a certain topic.
Absolutely. And we just gave a few points here. I mean, the gift giving is important to everyone.
Yeah.
But like we mentioned, sometimes giving the toy or a new shirt isn't what the recipient wants, and they'll forget it. Something like this might be a little more long lasting. And especially Ron's last point about meeting with a financial advisor, please meet with your own. But if you are looking for one or considering different options that are out there, please give me your consideration. And you can reach out to me directly at 708-226-3412.
And Paul, I appreciate you bringing this. The timing is absolutely perfect for the season. Thank you again for coming out with this topic. For Paul Municle with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you a good investment day.